Hello, hello. Welcome in for SBA Office Hours this week. If you got any questions about starting a business, buying a business, growing a business, and you're gonna be exploring SBA and any things involving that, feel free to drop your questions in here. My name's Kyle Fawcett. I lead the business plan writing services at ProjectionHub, and I was an SBA loan officer for about 7 years prior to that. So let me know what questions you have. I'll be here for about an hour today. I'd love to help. Hello, hello. Got any questions, feel free to drop them in the chat. Mhm. Hello, hello, welcome in. If you've got any questions, feel free to drop them in. I'll be here for about an hour today, answering questions and chit-chatting about all things starting a business, SBA, growing a business, anything like that. Hey, DDJ, welcome back. How are you doing? I heard you got to connect with Adam last week. Hopefully, that was a helpful conversation for you. Or do you come back bearing questions? All good. Cool, cool, cool. Glad to hear that. Always questions. Well, let's hear them. Feel free to fire away. Keep in mind, I haven't gotten an update from Adam this week yet. So if I say something he's already told you or whatnot, just a disclaimer there for you. How do I determine how much will on a 7A with real estate I can qualify for amount? So if I'm understanding correctly, you're saying how do you determine how much you can qualify for a 7A loan? Is that really the root of what you're talking about? So the amount you can qualify for on 7A is going to depend. It's going to depend on a few things. So again, I'm not sure what conversations you've had with Adam because I know in your case you already own, is it one restaurant and then you're looking to acquire the real estate that's going to house your second location. And so I'm not sure exactly how you're approaching, like how you'll be approaching the application, whether that's as like an expansion loan application, or if it's like a whole separate entity and you're trying to do it as like a startup entity, because those will change the loan amount kind of calculation. Um, but it's treated, like a little bit different than like a mortgage application or something like that. So assuming it, okay, treating it as expansion. So it's probably going to be like cash flow based. So, taking your historical financial statements, your historical tax returns to determine like how much cash flow the business is actually generating. And then SBA lenders typically want to look at like a debt service coverage ratio, and the minimum usually they want to see is like 1.25 or higher. So essentially, when you put together financial projections, 1.85, 1.85, that's what your debt service coverage ratio is with the business operating currently. Um, so the loan amount will be determined on like the projections. Okay, yes. So you'll basically take, that's great. So you'll take that your and when projections get put together, whether you're doing those on your own or if, we're helping you with them or whatnot. Again, I don't know what you've agreed on with Adam so far. Um, but we will do a set of projections based off of the historical performance of the business, but figuring in like how much of a loan you're going to need for the building. And then we'll see how that cash flow changes. So, if the building is, you have to remind me if it's a whatever. Well, let's just say it's a $500,000 building. We'll create projections based off of buying that with that loan, and then we'll see how that debt service coverage ratio changes. So it's probably going to drop, obviously. So maybe it goes down to 1.35 or something like that, assuming operations continue how they are, plus the hypothetical new loan for the building, making sure it still cash flows. So how much you can get kind of depends on how much you can cash flow, assuming there's the new loan. So let's say it's a $500,000 building, and then you add that in. to the projections, and then the debt service coverage ratio drops down to like 1.1, um, then that creates a little bit more nuance there, right? Either you got to shop for a cheaper building, or work out with the lenders what they're comfortable with debt service coverage ratio wise. So it's really going to come down to how that debt service coverage ratio gets impacted once you add in the loan for the new building, in the projections. Hey, Jordan, welcome in. How are you doing today? TDJ, hopefully that was a hopeful answer. But again, I'm not sure where you're at and what you've discussed with Adam. Great, glad to hear it. What are you working on? You working on any projects? You navigating a startup or acquisition or anything like that? Would love to hear what you're working on. It was 2.79. I mean, yeah, you're probably going to be fine then. So, how much you can get, like if all you want the loan for is to buy the building, you know, create projections based off of the historical financial performance of the business, see how the debt service coverage ratio changes. If it stays well clear of 1.25, then you should be golden as far as the loan amount is concerned. Now, if you wanted to say add on a couple $100,000 in working capital, obviously any additional thing you add on to that is going to drive the debt service coverage ratio down, and it's not going to be collateralized. So then that becomes a different equation. So, real estate you can usually assume is collateralized, because of like for one to one for the loan amount. So that's not really part of the concern. It's usually cash flow. But if you're adding on, working capital or something in addition to the real estate portion, then that's going to change the debt service coverage ratio and change the collateral amount. Yes, we do have a template, so you can plug in your numbers, see realistic numbers. Um, let me grab. I can grab a link for you, Jordan. I'm not sure if you're still hanging out in here, but would love to hear what you're working on or any questions you have. Here is an acquisition projection template. It is not free, and to be quite honest with you, the acquisition template is one of our more expensive ones. Um, but let me I'm just going to grab a promo code for you, and you can use that as well, or I can email you one. So with this, a disclaimer with this template. So one, this template will work great. This should be the right thing for you to use. However, if you've already talked with Adam about like us helping you with something or doing a service for you or whatever, um, like if he's helping you figure out SBA stuff and that's the thing, we might just be able to send you the template. So I don't want to undermine anything he's working on with you already. But I also don't want you to like unnecessarily pay for things if you already paid for something else. So, if you definitely want the template and that's where it stands right now, I can go grab you a promo or something. Right on, Jordan. Sounds good. Don't worry. I'm here for another 50 minutes to an hour, just hanging out. I was playing some music earlier, but I'm not sure it was coming through the speakers for you guys. All right. I will, TDJ, because I think we have your email already. Let me just email you one. I think. Yeah, I got your email here. I will. Is this the right? I think this is the right email. All right, I'm gonna send you an email now. And I'll just throw in the link to that template as well. Oh, that is a really long link. I don't know what that's doing. Welcome in. Ooh, I'm going to take a guess at this. Pavel Skincare. Um, how do I get started with a loan for my business? That's a great question. So, if you don't mind, can I ask you some follow up questions? Like, are you a startup? Do you have an established business? What's kind of the status of the business right now? And TDJ, let me know if you got the email. I just sent you one with the promo code in it. So Pavel, I happy to go into some criteria. Awesome, thanks TDJ. Happy to go into some criteria. The criteria just looks a little different depending upon, if are we looking at a startup loan? Are you looking at an expansion with a business you've been operating for a while, or kind of what you're working on there, and what you'd like to use the loan for will kind of change things too. So just a little bit more background, and I should be able to help you out there. Hmm. Thanks for hanging out today, guys. I've been really enjoying doing our little office hours on Wednesdays, so definitely planning to continue those. Um, so if over the course of the rest of the week or the weekend you come up with new things, new questions, feel free to check back in next week. Or you're also welcome to reach out to us, or you can email me directly. In the meantime, you don't have to wait until a live stream, but plan is to keep doing these regularly. What ad backs can be added? That it is a very good question. Um, and well, let's think about this. What ad backs can be added? Are you thinking, because with the so you're looking at are you looking at the acquisition template? I'm not sure what you're looking at. Um, so I was getting prepared to answer about like acquisition related ad backs, like sellers discretionary earnings type stuff. But in your case, you are acquiring like a real estate. So I'm not sure what ad backs you'd be referring to there. Jordan here, South Florida. Over the past year, our partners and I started a small acquisition group called Stable Rock Acquisition with the goal of buying and operating a small business. Right on. Very cool. What kind of have you guys identified like an industry or like type of business that you want to acquire in? And Pavel, I don't know if you're still in here or not, but I just, quickly searched for Pavel Skincare and saw that, you appear to have an operating established business. So as far as criteria goes, it's going to be, kind of twofold. For, an established business, I don't know if your business is older than 2 years or not, and it also depends on how much of a loan you want. Are we talking $50,000? Are we talking $500,000? Are we talking more than that? Um, but it's going to be parts personal and parts business. So business wise, they're going to want to see financial statements. They're going to want to see some, you know, positive trajectory in income, some positive cash flow. Probably some profitability, maybe. But on the personal side, we're talking minimum credit score 650, some personal money to be able to invest in the project. So there's different criteria, and I can get specific if I got some more details. Uh, Jordan's narrowed down pretty much everything service based. Yep, HVAC, plumbing, auto repair. I was actually just at a like ETA, the Entrepreneurship Through Acquisition conference yesterday. That was here in Indiana. It's kind of a state focused thing. Um, but there was tons, hundreds of people there, kind of in the same position as you, and lots of interest in kind of blue collar trades, service businesses, and specialty license. Yep, others don't. Makes sense. Jordan does. Um, Curious where you're at in the search process right now. But one thing I was going to ask you about: do either of your partners like possess like one of those specialty licenses? Million in revenue, 250K SDE. Okay. Do you have a okay? So you're thinking from like an SDE multiple target. So if $1 million in revenue, $250,000 in SDE, depending upon what multiple they have, you might be looking at $750,000, $1 million, whatever that purchase price might be. Do you have like an EBITDA target? Don't have a specialty license in the group, but our plan is to either have the owner qualify the business or give whoever has the license in that specific company 5 to 10% of our company. Okay. Yeah, because I know as far as SBA goes, there was a semi recent change, maybe even it was this year or end of last year, that kind of changed that license requirement. Um, and like you just said, it looks like it's going to require the seller, if they're the one that holds the specialty license, to stay involved in some sort of ownership capacity, which I know can complicate things with like signing on to the guaranteeing the loan or whatnot. EBITDA looking for 150K on the loan. Okay. Do you so it sounds like you're in the search process. Are there any questions I can answer for you, or like are you trying to prepare and navigate for the financing component, or anything that's kind of stumping you right now? This is great. So many great questions today. Having a blast. in the search process and are really looking to acquire business within the next 3 to 5 months. Nice. Have you, doesn't sound like you've gone under LOI or anything like that yet. Have you identified any specific, I guess I should ask, are you primarily searching with brokers, or trying to do like a self-funded search or off-market search, or have you had any success identifying some specific businesses that potentially want to submit an LOI for? Brokers and looking for off-market. Cool. It's a pretty good combination. Like if you're going exclusively off-market, that time frame might be a little tight, but yeah, having brokers in there too is obviously going to help get you more deals to look at. Received about 2030, still haven't found the one yet. Sims, okay. Well, that's exciting. You guys are like, obviously there's a long process ahead, but like I was saying, I went to that conference yesterday and there's a lot of people you can tell who have been thinking about it for a really long time, um, and haven't, had the courage or haven't felt prepared to actually jump into the like shopping component and actually starting to submit offers and review that. So pretty exciting that you guys are to that point. Well, if you have, I'm not sure again that you're in need of anything right now, but need help analyzing a potential deal or talking about financing options and all that kind of stuff, just let us know, whether it's in a live stream or just reaching out to us directly. Be happy to answer some questions for you. Template emailed is just input numbers that I have from my accounting software. Or do I need to go back to CPA? That's a good question. I don't think the whole purpose of the template is meant to be able to do it on your own. Now, as far as going back to your CPA, it's like if do you have access to financial statements? Like if you have access to recent financial statements, then you should have all you need to know to be able to do that template. Um, we offer a service to be able to just like do the projections for you, which is probably cheaper than your CPA doing it. But yeah, if you have access to your financial statements in your QuickBooks, you should be able to have everything you need to fill that out. Shouldn't require any like back of the napkin calculations. A lot of it's just like plug and play based off your historical actuals and then settings like some growth rates and stuff based upon that. There should be a video that kind of demonstrates how to use that you could give that a try. And then you can let us know if you have questions while you're doing it. Um, Jordan, you said, I really want you to be honest. We're really young, 21, 22, and we're looking to possibly get an SBA loan. And we have three personal guarantors who make a combined income about 190K W2 salary, and we have about 60K down. Follow up to the last mention sent. We want to structure SBA deals with 5% seller note on full standby, 5% buyer injection, 15% seller note, and 75% SBA loan. We have one guy who has been a manager in the hospitality industry for about 4 years. I mean, you got a lot of like, you're thinking about a lot of the right things there. So, like, obviously, could it be a challenge that you're young? Sure. Like, especially when it comes to the SBA, I want you to prepare yourself that it's probably not going to be like one and done lender conversations. It might require, a few conversations. You didn't ask for this, and don't take this as like a hard sales pitch or anything like that. But we'd be happy to help try to recommend some options too. Like if you identify an opportunity and you're like, yeah, this one's looking good, you go under LOI and then you want to start exploring financing. We could try to make some introductions for you, and we've got kind of our own list of lenders we like to work with. But you're thinking about all the right things. Using a seller's note strategically to be a part of the equity injection, because 5% is kind of the max of the seller note. You can count towards that injection, but if you find the bigger challenge will be finding. I don't think that the SBA is going to be as big of a hurdle if you guys, even though if you're young, if you've got some decent credit history, you've got some cash to put in, you've got some co-signers, so you got a lot of good things going on that front. It's probably going to come down more to the business that you find and the seller. So are you going to find a seller who's going to be willing, to do 15, 20% on a seller's note? Because if it's a decently performing business, they're likely going to have some better offers than that. So that just might be what it comes down to, the competitiveness of the offer. So I don't know that SBA is going to be the bottleneck there. It might be the finding the right deal and a seller who picks you guys, to be the right one. So it is a bit of a dance to find a deal, that's like the right combination of right price, decently performing. You don't want it to like sometimes there's this myth that people think a lender might be excited about finding a business that's like a really good deal, because usually a really good deal means that it's underperforming and there are things that are obvious to you that you could change or improve. Which is totally fair, but like lenders want to lend to businesses that perform well. So, the ideal types of acquisitions that a lender is going to lend to are going to be more expensive because they're probably profitable for many years, have a lot of things going for that way. So that might push the price out of your budget. So you really got to find that nice middle ground where it's like it is cash flowing, but isn't probably performing like it could be. That might be a person that is a longtime owner and it had ran really well, but maybe they've been kind of absentee for the last 2 years, so revenue's dipped a little bit, but it's still profitable. Like that might be kind of where you're looking and having some from that. So yeah, being totally honest, there's nothing you've said to me that screams SBA won't be interested. Again, you might need to have some conversations, but if we've got co-signers and personal guarantors that can help kind of sidestep the age issue a bit. There's cash involved. So I think a lot of it just comes down to the right business, which as you've learned, takes time to scan through all of those. And if you want like a more like deep dive specific answer as it relates to the SBA side of things, you're welcome to fill out that free SBA review form, that free like SBA expert review form. And you can put as much information in there as you want, and that will come to myself and the owner of Projection Hub, Adam. Um, we were both SBA lenders. He was the executive director of an SBA lender. So if you really want the most specific advice, I would fill it out with all of your partner information and your guarantors and all that kind of stuff you told me. And then, he can kind of give you his gut feedback on the SBA side of things. And then, you go down the road and look for deals. He can kind of help you kind of figure that out. But yeah, if you want some more validation on that front, that's probably your best bet. Thanks for the questions, Jordan. Really appreciate it. Still got about 30 more minutes on today's office hours, so I'll be hanging out. If you're out there and you've got any questions or want to chat just about what you're working on, um, today's been a fun one. We've had a few good situations today, and just kind of talking through that. If anybody else is hanging out and stream today, you got questions, feel free to drop them in here or just let us know what you're working on. Looks like we got a few people sitting here. TDJ, what should I be looking out when a bank gives me rate sheets, fees, rates, terms? What is the main area to see if that bank is for me? Good question. So, first thing I'll say right off the top is if a lender is willing to give you a term sheet, that's a good indicator, right? So, like, especially if I'm assuming, yeah, again, SBA wise, if they're willing to offer you a term sheet, the lender to lender, like if it's a legitimate like national SBA lender, their rate structure, term structure, fee structure, it's not going to differ a ton. The rate may be, change a little bit depending upon who the lender is. Like if we're talking, like if you manage to get a term sheet from Huntington Bank or something like that. It's going to be probably pretty solid. Now, if you're looking for, there are different types of lenders that might be a little bit more aggressive on the fee or the spread. So the complicated answer is it's going to just depend. But if they're a bona fide, you know, depository and SBA lender, there's not going to probably be anything sneaky on like a rate sheet or a term sheet. Um, so that's one thing to keep in mind. Now, 7A, one thing to think about might be like terms, like how far out are they willing to go on the term? I want to say a maximum term length for a 7A loan might be 20 years or 25 years for real estate. So I guess that'd be one thing to check off on is it's like, are they looking at a 10-year term or are they already planning to extend it out further than that? Because obviously if you were just like mortgaging the building, it would be a longer term. So that's one thing, maybe to just see what kind of term are they thinking. Um, and then fee structure, like SBA guarantee fee is a big one, but that's not the bank's fee. That is the SBA's fee. So that's going to be on every 7A loan, no matter what. Um, so yeah, it's difficult to say without like if you can only get one term sheet, then that's great. If they want to work with you, that's awesome. Another part of it too is at what stage are they giving you the term sheet? Like if you talk to them one time and then they give you a term sheet, you know, I don't know how much that term sheet is worth. But if you've submitted a lot of things and gone through a decent part of the process and then they issue a term sheet, that should be a pretty positive indication. What fees are added from the bank and not SBA fee? That is going to depend on, you know, I'm going to pull up one of our resources here. I don't want to speak out of term here. Like they might have a packaging fee, but it's should be a whole lot less than the SBA guarantee fee. Like the SBA guarantee fee, I'm just going to read it right here. Like it can be a couple of percentage points, especially if it's over $1 million. If it's less than a million, usually the guarantee fee is quite a bit smaller or non-existent. So, but in general, any fees usually come out of the loan proceeds and not like out of pocket. So you shouldn't have to cut a check for that. It just will probably be taken out of the loan amount. Um, but like if you talk to a bank and you get a term sheet and you're curious like if it's a good one, TDJ, you're welcome to contact us. And like we wouldn't charge to like look at a term sheet and give you some feedback on like, wow, yeah, that rate's higher than we would think. So another thing to think about the rate structure for SBA loans is they are based off of um, the Fed rate. So like the prime rate is what it's called. So in the news when they're always talking about the Fed rate and like how that's changing, like that directly impacts SBA loans. So it's usually the prime rate plus a spread, and SBA lenders have a maximum spread. So they can only, charge up to like a few percentage points of a spread off of that. So if a bank gives you a term sheet and it's a 10% loan, don't take that as a slap in the face because prime rate, like I'll look up what the prime rate is right now. See what right now the prime rate is 6.75%. So like the base is 6.7. Like they're not going to be lower than that. And if they had a 6.75% rate and they're using SBA, they're not making any money off that spread. So I would expect it to be like prime plus 2, prime plus 3. That's probably going to be let's see. One bank told me they could do a fixed for 5 years with a 25-year term on a 7A 100% financing. That doesn't entirely make sense to me. They can do a fixed. Like they're saying they're going to fix the rate for 5 years And does it, like, balloon after a certain point in time, or does it become variable? Most generally, 7A loans are variable. Most time, SBA loans are gonna be variable rate because they are tied to prime and the prime rate changes. So if the prime rate goes down, then your interest rate goes down. If prime rate goes up, interest rate goes up. So, yeah, that I'm not 100% sure what they're meaning by that structure. I would be skeptical of, like, a balloon payment. That would not be fun. Like, if it's fixed for 5 years and then it goes up dramatically or something like that, that would be maybe a red flag to me, but I don't wanna misinterpret what you're saying. You're welcome to send us a term sheet to review it if you want. Um, but if it's a, reputable SBA lender, I don't know that I wouldn't be nervous there's something shady hiding in there, but a different lender may be able to give you a more attractive offer, but again, SBA has limitations, so it's not gonna get dramatically different from lender to lender. They might just be able to be a rate on they might be able to beat the rate by a point or something like that. Um, or, you know, something with the fees or something like that, but I wouldn't expect there to be something super surprising there. Another interview tomorrow with them, get a better explanation. Okay, sounds good. Do you, TDJ, do you feel comfortable saying the name of the bank? You don't have to if you don't want to, but I don't know if like, are we talking like a Huntington or Live Oak Bank or somebody? I'm just curious if it's a larger reputable like SBA lender or not. Bank of Tampa. So I'm guessing they're pretty regional. I'm just looking at their website right now. Cool. And for the record, local or like regional SBA lenders are not bad. Not by any stretch of the imagination. I worked for a regional one, so I think it's just, you know, they might have a different process or unique process because the national ones are just usually a little bit more like standardized in their approach. So yeah, just get an explanation of line item fees, rate structure, term structure. Um, so maybe they were meaning for that fixed 5 years on a 25-year term. Maybe that means they'll fix the first 5 years and then maybe it switches into like a typical 7A variable rate. So like I was explaining, like if it's tied to prime and the prime rate changes, then your payment may go up or down. Um, but maybe they do something where they like lock in the first 5 years. So yeah, maybe just get a little explanation on how they're fixing that first 5 years and what happens after the first 5 years. Like, does it just get readjusted based off of prime rate, or do they have some sort of balloon schedule like that? That would really surprise me, and I would doubt that they can do that. So it probably just does revert back to they won't sell the loan; it's their portfolio. Interesting. That's kind of surprising to hear because most about the only benefit for a bank to do an SBA loan is that they're going to sell the guaranteed portion on the secondary market. So they told you they're going to hold on to the loan for the life of the loan. Like they'll of course keep the non-guaranteed portion, but usually they sell the guaranteed portion because that's like an immediate payout for them, and then they collect the payments on a smaller portion over the life of the loan. Regardless, if they have a term sheet for you and you want to send it to us, we can take a look at it. But there's nothing about them that screams to me that they're like sketchy. You know what I mean? It's like at the end of the day, if they're a bank, like an FDIC insured bank, it's like they're not going to do anything crazy to risk that. So I'm sure they're on the up and up. Um, But yeah, I don't know if you've seen term sheets, but I would definitely expect something in the 7, 8, 9, 10% range, probably on the higher end of that. About the only way you'll get lower than that is if they're doing it traditionally and they're like lending their own money and they're picking the rate. But that's usually for like very high wealth, high performing, massive companies or very well established businesses, not usually a small business. We got about 15 more minutes here of today's office hours. Had a lot of fun so far today. Lots of good conversation. So if you're out there and you've got questions about starting, buying, growing a business, SBA, let us know what you're working on and we can chat about it. What are the main questions you should ask them tomorrow? Is this your like how I don't know how far into the process you are with them. I don't know if you've submitted documentation or anything like that with them. So, it's going to depend on, what you've already given them. But you might want to ask them what does the like application step what are their typical steps? Like a lot of lenders will do loan officer intake and then like an initial review and then maybe they'll do I don't know if that's when they'll give you a term sheet and then they'll do underwriting at some point, which is going to create a whole nother set of questions, concerns, whatnot. And then if it passes loan committee or passes underwriting, usually some sort of committee or executive, depending upon the loan amount, will make the final decision on whether or not they want to proceed with closing that. So I would maybe just ask them, what are the steps of the process? Roughly how long does it take, assuming you're prepared with all the materials when they need them? I probably would ask them about fees. What are the closing fees? Is there any fees in addition, to like a SBA guarantee fee or anything like that? Also, you may ask them when they do like a hard credit pull. I don't know if they've already done that yet or not, but you know, sometimes it's helpful if they can like give you some preliminary feedback on like if they like the deal or not before they proceed with like a hard credit pull. Because if you have to talk to multiple lenders, you don't want all of them pulling your credit. Um, so if that hasn't happened yet, maybe ask them like at what stage that's going to happen, and if you'll hear anything about you know, if they like it or not, before that point. Oh, and you may ask them again. I don't know if you've already had a conversation with them and how far along the way you are. Like, you may not want to be picky, but you might just ask them like about their experience with restaurant expansions. Like, is that something they've done a lot of? So that's another part that I was getting back to about like smaller, whether it's local or regional SBA lenders, is they just have a little bit less diverse experience on deals because there's just not as many deals. So if you're working with a national lender, they're going to have like specialties, a portfolio. They can be like, yeah, we've done a lot of trucking businesses. Like it can just flow through the process if it's a type of deal they've worked on before. But this is, if it's a small lender, maybe they've never, you know, do they do many SBA loans? Maybe they've never done an SBA or like a restaurant expansion. So just hearing from them, you know, if that's something they've if your deal is one they've worked on before or something like that, that can be helpful. All right, we got a little under 10 minutes to go. Today's office hours. So if you've got any more questions or topics you want to get into, feel free to let me know here. Difference of your self template versus you guys doing it for a fee. So we usually are using the same templates. You're gonna go through kind of a process where like you'll work with one of our financial modelers, sometimes even Adam directly, and he's gonna ask you all of the questions and collect all the information that he needs to know in order to create like an accurate set of projections. Um, so he's not just gonna like put in the numbers you tell him that whatever that he like wants to hear. He'll request, like, he'll take your financial statements and all of that information. He'll take it and get the projections all filled out and ready to go, and then explain it to you, and then make modifications to the template if needed. And then like if lenders have questions, we can help answer those questions for you. So all of the templates were created as a result of us doing like a project for somebody. So that's how the templates came into existence. Is those financial models were used for like a real business, and then we turn that kind of into a do-it-yourself version of the template. So we use those actual templates to deliver services. You just kind of get that layer of like an expert is the one asking you the questions, collecting information, and then um, creating the projections using that and kind of explaining it. So it's really just adding the layer of an expert is the one doing it for you, filling out the template, explaining the template, making tweaks and all that stuff. Yeah, you can definitely use it with the bank for an SBA loan. That's probably 90% of the people who use the templates and that we do projections for are people creating projections for banks or for loan applications. They'll primarily just want the financial statement outputs, those green tabs at the end. Um, but sometimes it can be helpful to share the whole file with them because they can see the blue tabs and see all the assumptions that went into it and all of that. So, but yeah, the service is basically you're just getting our team to, make it foolproof, answer questions, that kind of stuff. Also, it's worth probably mentioning, like, let's say you buy the template and you give it a shot, and then you decide, like, I really just want someone to help me. Whatever you spend on a template, we will roll that into a service. So it's not like you're wasting money if you ultimately end up deciding to get some help with it. So totally fair play to give it a chance yourself, play around with it, make sure you think it looks good, and if you decide you do want some hands-on help, you can let us know, and we'll discount that off of any sort of invoice on a service. All right, we're closing in on the end of office hours here, so I'm probably going to wrap up shop soon, unless we get any new questions or any new things to discuss. I've had a lot of fun today. Appreciate people stopping in and having lots of good dialogue and conversation topics. We will definitely be back next Wednesday. In the meantime, if you've got any questions, feel free to reach out to us at support@projectionhub.com. You can contact, myself. I will see that. Adam will see that. The whole team will see that. We can answer questions. If not, we will see you guys at the next office hours if you have more questions. But I'll give it a few more minutes here to see if anyone else pops in with some last minute questions, and then we'll wrap it up. All right, I'm going to close it down for today. Thanks for hanging out, guys, and we'll be live again next week. But reach out in the meantime if you got any questions. Thank you. So, last quick call, or else I'm going to close the office hours for today. All right, thanks, guys. We're going to wrap up office hours today, and we'll see you again next week.